Today's guest is Mollye Santulli, investor at Springdale Ventures, an early-stage consumer brands fund across sectors like food and bev, beauty, pet, and wellness. We talk about how around 1,000 decks a year funnel down to just 5 to 10 new checks. We unpack what it actually looks like moving from a pitch from inbox to first call to partner meeting. We also zoom out to consumer shifts, how older Gen Z and younger millennials are entering parenthood, how community is moving beyond Facebook groups, and the rising importance of in-person nodes and authentic founder-led content, especially on TikTok. On capital strategy, Mollye favors people over themes, crisp PMF signals, and critically thinking about margin pathways at scaled states. Welcome to In the Money, an exploration of whether you can still make money in D2C and CPG. We talk to some of the most interesting $5 million to $50 million founders, operators, investors, and acquirers in the space to ultimately answer the question, is D2C and CPG still a good business? Hope you'll enjoy the show. So, Mollye, in pre-recording, you were sharing some of the metrics of what it's like to be a fund manager at Springdale, that around 1,000 deals land on your desk or the firm's desk a year, and directionally do 5 to 10 new investments a year. So 0.5 to 1% of deals end up getting done. Maybe you walk us through the first step. How does it land? How does it get from your desk to you being like, actually, let's do a meeting because this is pretty interesting?
Yeah, no, it's a great question. And I think obviously one of the most fun parts about my job is how many deals we get to look at and what I get to learn every day. I mean, being in a broad consumer space, we see a lot from, pet to beauty to snacking, beverage every day. I get to see a lot of new stuff that's being created out there. But to answer your question on, what really gets a deck past our, just initial review and onto a first call with someone on our team, it really has to do with one. I mean, a lot of it is how it came in. And obviously, we look at everything that comes in on our website, through our online form, through LinkedIn, through just random emails. But if it's from a trusted source, that's a really, really great way to help increase the odds that we want to do a call. So a lot of our deals come from other funds that we're close with, whether it's co-investors at the same stage as us or later stage funds that might get access to deals, or founders that they know who are maybe starting something new and they share it. So that's one pretty big source of deals for us. And then a lot of it is just our network in general, whether that's founders in our own portfolio, founders we're close with that maybe we've even passed on and they know someone. That happens pretty regularly, actually. Founders reach out and say, I met this person, they'd be a perfect fit for Springdale. And then the last is in our network, I'm always talking to Amazon agencies or, different, fractional marketing resources or finance resources. And I make sure to spend time with those people because they often are getting to meet founders who need their help. And another big piece of that help is financing. And so a lot of it comes through our resources. And then in terms of what, in addition to obviously the intro, and if it's not an intro, when we look at a deck, some of the things that get us excited right away are, what's the founder's background? Do they have some sort of unique position to be able to win in this space? So have they worked in consumer before? Did they work at another startup? Have they built a team in the past? Do they have some sort of, unique background that gives them the ability to scale? Whether that's, something really proprietary or even something as simple as, if they've been at a high growth startup. The other thing would be clear proof of consumers already wanting this product, not just a founder saying that they believe the market needs this product. So have they tested with their friends? Have they tested on Instagram? Have they done some sort of market testing to prove demand? And then the last thing would be just in terms of the product in the category, is there an easy story to tell about why this could scale and be venture backable? And what we mean by venture backable is, do we believe this can get to an exit in the next 10 years at the most and get to that stage of growth that a strategic or a financial sponsor would be interested in acquiring the brand?
So it's come from a trusted source, got a compelling reason to exist with a founder who has some relevant experience. It gets to the meeting. What separates the meeting to, hey, we're going to take this at the partnership and do a full screen?
Yeah, no, I mean, That's the big weed. Besides, the initial deck, and then it gets very small to get on a call with Genevieve and Dan at Springdale. And so the things that get me really excited. I mean, first is just like excitement to talk to us, and like I think this goes in any relationship or call you're getting on with anyone in your life. But you've done your diligence, about Springdale. We actually send out a pretty amazing, in my opinion, overview deck about Springdale to all of our founders before they talk to us. And when people email me back in advance or when we get on the call, say, I went through the deck that you all sent over, like that goes a long way. It means a little bit about us, what we look for, what we get excited about. So I think the first thing is, coming prepared, and then the energy of the call goes a long way too. I mean, we do just as much as founders are doing a lot of pitch calls. We listen to a lot of pitches every day, and having an excited founder on the phone is the best part of my day. Hearing someone who's like, I'm changing the world with my consumer brand, goes a long way in terms of, just the conversation that we're having. And then I think the other thing, and it's totally up to founders, and I try to make it conversational when I talk to them, but knowing what your skill set is when you're presenting, is it that you're pretty good at presenting with the deck and you're most comfortable that way? I would just be honest with investors and say, look, I'd really love to have my deck open. That's the best way for me to tell my story. Or are you someone that really is better at conversation and going through the deck is kind of forced? Like, we're pretty indifferent. We have the deck in advance. We usually come prepared to those calls, but making sure that you know what you're most comfortable with and what helps you tell the story best is what really makes for a good call. And then in terms of what gets me like really excited to go talk to the partners, it's, can you convey all of the things I just said about what gets us past the deck to the first call, convey them all, tell the story, and show why we're a fit. Springdale's a fit, why you're a fit for us, and why, you're looking for venture capital funding.
In terms of product and product belief, how much of it is like you and the partnership being like, yes, we've got our hands on the product, we've tasted the product, we've used the product, versus like, actually, we don't even need to see the product, we just want to see it in the data?
I think we really want to like the product. It's pretty hard for us if none of us are consumers of the product. I mean, it's funny. I've only ever worked in the food world. So like snacking, going to Whole Foods, all of those things come very naturally to me. I've probably tried a lot of the products that we're looking at from a diligence perspective, just for fun. If it's food and beverage, like taste is number one always, even over the metrics. Like if none of us like the taste, even if the metrics are pretty good, we have a really hard time wrapping our heads around it. So taste is really important. I would say in, supplements and beauty and personal care, what we really want to see, and whether it's us or in the data, is repeat data. And if it's a D2C brand, what kind of repeat cohort data can you prove? If it's in retail, can you get any of those velocity metrics? And then even things that might not be true, like numerical data, but what kind of qualitative data can you get from your consumers? Do you have, some sort of Discord channel or a Reddit page where you can show that people are like really loving this product, even if for some reason our team at Springdale doesn't love it? There has to be some sort of proxy for us knowing that people love the product. But I do think eventually there's a lot of things we look at that might be fads or trends where a lot of people try it when it launches with the big splashy launch. And that's where we get really nervous is, okay, maybe some people like it, but they only like it one time. So how can we try to, prove that out, that it's not just a one-time purchase for people?
If you're like most founders, supply chain is probably one of those things you just deal with because you have to, not because you love it, and not because you're an expert. If you spend hours chasing suppliers, negotiating tiny price breaks, trying to figure out if delays were real or just another excuse, you probably want to pay attention to this next bit. Move Supply Chain is a team out of the Philippines I've been working with, and they've saved me hours I didn't know I could get back. They handle the messy stuff: sourcing, supplier vetting, negotiations, tracking, and even inventory planning. They've helped D2C brands I know lock in better MOQs, negotiate stronger supplier terms, and make smarter decisions with working capital. What do I like most? They don't give you a deck and disappear. They actually embed you with ops and fix things that are slowing you down. Now here, a bonus for listeners. They're offering a risk-free 4-week trial. You can use code INTHEMONEY to get a discounted rate if you want to test them out. Anyway, if Q4 is starting to feel a little too close for comfort, check them out. It's one less thing to deal with, one more thing you can upgrade to an expert level. Websites movesupplychain.com. That's movesupplychain.com. To move beyond the kind of investment process, to talk maybe about some of the things that you're seeing in market, are there trends or consumer shifts that you're seeing that you're getting excited about?
Yeah, and I don't have I was thinking about this when we were talking about the questions that you were asking me. This transition of older Gen Z, younger millennial into parenthood is something that I'm really fascinated by. And with my generation growing up online and then now in entering adulthood, what does that mean for how we consume? And I was just thinking about it with another brand talking about Facebook pages, and these like mom Facebook groups. And I'm like, well, my generation doesn't really use Facebook. So what's the next place that people are going to have these groups of people where you have this captive audience? And so thinking through, where are people showing up, whether that's in person at events, whether it's just on Instagram, whether it's on TikTok in the comment section, how are brands going to get these captive audiences and make sure that they can communicate with their following if Facebook might not be the only option anymore? So what are all these other places people are showing up? So from a consumer trend, and just like how consumers behave, I think that's really interesting in this, especially this in-person connection point with some of these in-person groups, whether it's I'm part of a golf group of women here in Chicago, and there's hundreds of women around my age who've signed up. Like, what a great place to sample products if you were a brand trying to reach a certain demographic. And then I think the other thing we think about a lot is, given a lot of the brands we're investing in are a premium price point, and given where the macroeconomic world is right now, what are people willing to spend on and where are they willing to make trade-offs? And the rise of private label, which has obviously been around for a long time, but there are still obviously brands we've invested in and others have invested in that have beat the private label world. So Goodles is a great example in our portfolio of like slightly premium product, not super premium. It's mac and cheese. And people aren't trading down to private label. They are buying that product. So how do you continue to prove your worth as a brand and beat out the private label world?
For something like, trying to predict the market, I think there are at the highest level two different flavors. One, which is like, hey, we're going to try to really underwrite the initial traction and let the data speak for itself. Thus, hey, we're going to be highly thematic and predict where consumer will be in 2035. Yeah, is there a preference at Springdale?
Yeah, I would say we're definitely, we invest early. Usually brands doing 1 to 15 million in revenue or some opportunistic pre-revenue. I would say the things that get us most excited are not the themes or the trends, but really the people behind them. And I know that sounds a little cheesy, but when we think about our best investments, the brands we love working with, the ones that we continue to reflect on of how do we replicate, these types of investments, it usually comes down to the team and the founder and the vision they have, their ability to hire. Are they receptive to feedback? Do they know how to fundraise? And so we spend a lot of time when we're looking at new deals, trying to triangulate, what are some of the qualities that this founder we're looking at has that we see in our other founders. And not every founder is the same. We have a lot of different profiles in our portfolio, but some of the things that I touched on, like hiring, their vision, ability to execute, really understanding the metrics are what are most important to us. And so on that, tangible question on metrics, obviously we invest early. So the metrics are what they are at the earliest stages. Like sometimes there's not a ton of clarity. The financial forecast is somewhat, pretend for a brand doing $1 million in revenue, but does the founder really know the levers to pull in order to scale? And so we look for product market fit, and there's a lot of different ways to show product market fit. But what we get really excited about is a founder that maybe is doing really well on D2C or on Amazon and can prove out, oh, if I pull back on spend here, I know it's going to impact this. Or I know if we scale really well on D2C, this retailer says that they're already excited and I know my consumer shops there. So what are some of these tangible metrics that the founder can show us? And that's much more exciting to us than the category necessarily. I mean, obviously we love trends and trying to predict the future, but I would say a lot of what we've invested in. I mean, I don't think anyone would have said, when Beatbox launched, like, oh, I'm like super excited about this particular category in alcohol. But I think the brand that those founders built and their ability to execute is what has made them super successful.
And maybe it's the same attributes that you just talked about, but I'm curious, in today's landscape, going from seed to Series A, or even just abstract the labels, the first institutional check, which is where Springdale likes to come in, versus the next institutional check. What are some maybe common traits you're seeing for brands and founders navigating that transition?
Yeah, I think obviously we want to see, like I said, some sort of product market fit, but that should be by the time we've invested, looking to raise that next round of capital, very clear product market fit. People are coming back to buy this product. And the brand has a really clear positioning and message and voice. And I think where we've seen that be really important is that brand voice is then what lends itself to being able to reach consumers across channels, which is so important now in consumer. And so communicating to your consumers on TikTok why this brand is so, important, why it should resonate with the consumer, but also being able to communicate that on shelf in a retailer. That's really important to us, what we think makes brands win for the next round of capital. And then really tangibly on operations, margins should be much closer to, some sort of steady state margin profile with clear actions on if we get, this scale, if we buy this ingredient instead, if we work with our co-man to, upgrade some of the manufacturing. These are the things that will get us the right margin profile. And that's when we talk to our later stage investor friends. They usually say, they talk about margins a lot and how can they help help with the operations. That's where they really want to come in and solve problems. And then on distribution, being able to continuously scale in different channels. So if it's on D2C, how do you make sure your subscription model is really working? Are you gaining new subscribers, reducing churn in retail? Our velocity is starting to increase. Are you able to show that when you go on promo, it's working? Those sorts of clear metrics that at our stage, there might be a couple of those metrics, but at the next stage, it should be a very clear story for that next round of capital.
And it seems like founders are getting much more fit about capital use and capital efficiency, maybe due to the capital scarcity. Do you have any advice for founders as they're navigating from kind of pre-seed to some mid-market scale, 20, 30, 50 million in revenue, in terms of, quantum of capital raise, how long that should last, how reliant they should be on that next round?
Yeah, we like to say, which is easier said than done, and this is coming from my place as an investor, is you should be able to pull back on capital infusion and have a real business underlying your brand. And as an investor, like I said, easy for me to say that you shouldn't be always relying on the next raise. But we like to know that a founder, if they did have their, next raise pushed out 6 months, 12 months, would the business survive? And so I think thinking in that scarcity mentality is really important, and knowing what levers you can pull and what the impact to revenue will be. So our biggest advice is having a great finance support team always, and whether it's outsourced or internal, that finance team that can help you understand cash burn, where you can pull back and where you could accelerate if you needed to scale more. And I think the hardest part about all of this, and I think most founders would say, investors are always saying this, is like, we want you to be close to profitability, but also growing really fast. And I think it's really about, do you know which levers to pull to touch on those, depending on when you're raising capital. And obviously growth is really critical. And as at Springdale, we only are wanting to invest in brands that are growing really quickly. That's how we make money in venture. And so really understanding those levers. And then with the scarcity in terms of timing between rounds, we say 18 to 24 months between rounds. You don't want to be fundraising every 12 months. And then, one, it's very hard to hit a lot of the milestones of that next round of capital is going to want to see in 12 months. But two, you then become a full-time fundraiser and not running your business. So hopefully 24 months of runway with each raise is usually a good, rough estimate of where to shoot for.
AI. Everyone's talking about it, and you're worried you're getting left behind. Meet RichPanel, an AI-first customer support platform that's built for one thing: making support faster, smarter, and cheaper for e-commerce brands. Something you can actually feel smarter about using. RichPanel combines a unified inbox across email, chat, and socials, a customizable self-service portal that customers actually use, and Sidekick AI, powered by GPT-4, which learns from your past tickets to suggest on-brand replies. Does it actually work? Well, with RichPanel's guarantee, you get guaranteed 30% cost savings when you switch from Zendesk or Gorgeous, 30% automation to reduce your ticket volume, and a no-risk guarantee that if RichPanel doesn't deliver those results in 60 days, you get a full refund. That's why top brands like Ridge Wallet, Jones Road Beauty, and Pella Cases are already using RichPanel to save hundreds of thousands in support costs. Time to start letting AI work for you. Head to richpanel.com and start your free trial today. Real savings, real automation, real AI that actually works. And then in terms of growth rate, so let's just say between the seed and next round, or between the A and the B, like what is a growth rate that's fundable in today's market? Is it kind of between those? Let's just use 2 years as a gap. Is it a double? Is it a triple? What would you be expecting?
We would usually at the early stages want to see like at least doubling every year, super early. And obviously that's really hard. But I think our general, what we're excited about is, that doubling, tripling, maybe even at the earliest stages year over year.
Are there any kind of traction metrics? You mentioned like on the seldom occasion, you'll even do pre-revenue, but traction, founder traits that would make you want to go earlier?
Yeah, we've done a little bit of pre-revenue investing out of both funds actually. And a lot of those have had to do with obviously the founder, which we've talked about a lot, but with that, what I mean when I say what excites us about a founder, it's some sort of insider knowledge. Like, why are they building in this category? What's super unique about them that we need to come in earlier than usual? And so a lot of times that's something like industry expertise. They have some sort of, unique knowledge, something proprietary, maybe in supplements or beauty that comes up more than food usually. And then we've invested in a number of brands very early on if they do have a retailer partnership. And so that's a very unique business structure. A lot of times that's gone hand in hand with a influencer celebrity brand. And so in this most recent fund, we've done a couple of these, but we invested in Cloud, Khloe Kardashian's popcorn brand, which was launching in Target, Tone, which is a men's personal care brand, which launched in Target. And then most recently, we're partnering with Magnolia Table with Chip and Joanna Gaines, which is also launching in Target later this year, which we're really excited about. So those are some examples of obviously a very different business model of celebrity brand launching in retail right from the beginning. But usually the other piece of that, when people say, why do you always want to invest in celebrity and influencer brands, is that they have a really strong operating team behind them of people who have done this before, either at big companies, at startups, and really know the playbook. And so the power of the celebrity or influencer to go really big at the beginning, the retailer backing and excitement on their end, plus a really strong operating team, we've seen work time and time again.
Has every advantage, but I guess ultimately the market receptivity, velocity, that's the risk that is kind of hard to predict.
Yeah, and I think that comes back to your question on taste, or do we use it? We want to make sure all these taste good, and I can say for certain that these ones all have tasted good, which we have been very excited about. So no, there is definitely you have to wait and see what the consumer says about, do they resonate with, whoever is starting this brand or partnering on this brand, and taste and price point and all of the above are a big part of that.
And then are there any red flags in an otherwise exciting brand that's, down the Springdale funnel?
Yeah, we spend a lot of time talking about this, which is a good thing, of like, what are the things that could go wrong if we were to do this investment, or what are some of the things that don't seem perfect, even if we really liked the call that we did. I think one is just this really deep understanding of your community and your consumer, and the best founders that we talk to, even at the earliest stages, have a sense of that. And it's not like we'll wait and figure it out. It's really hard to kind of figure out after the fact. Obviously, your consumer base grows and you have different, pockets of consumers in different places that you can reach with different messaging. But a real understanding of who this is for and why the initial consumer is going to be excited about it, if that's not really clear to us at the beginning, that's definitely a red flag and something we get concerned about. The second thing would be on financial acumen of the founder. And every founder does not need to be a finance expert. But if they aren't, have they hired the right people who can support them? And do they know enough that they understand the drivers of their business? So we spend a lot of time not interrogating founders about, different financial levers or, what are these metrics off the top of your head, but can they have a conversation about those business drivers? And then the last thing is really just on terms. And so it's not necessarily a red flag, but most often, one of the things that gets us to say no to a deal that we get really excited about is just that it doesn't make sense for us as a venture fund. And what we mean by that, and we have pretty transparent conversations about this with our founders that we speak to, is are we going to be able to get venture style returns based on what we believe an exit multiple to be based on our entry valuation? And so if our ownership at entry doesn't make sense for us to achieve those returns and we can't come to an agreement with the founder, like we might end up parting ways even though we really love the brand and the founder and the team and what they're building. So that comes up a lot and we try to be really transparent about that.
Yeah, that's awesome that you're willing to have a conversation with, because I'm sure that that's not necessarily as intuitive as to a lot of early stage founders, but just to walk them through the math of like, hey, this is what it needs to be for it to work for both of us.
Yeah. We spend a lot of time on that. And even for some founders, we'll build out, pretend models of, if you raise this now, you raise this at your next round, and you sell for this much money, this is what you might make as a founder. This is what your dilution will look like. If you raise, 5 million at your seed round versus 2 million, like what does that mean for you as a team? So we try to be super helpful there when we can be.
And then for maybe a couple of the brands that are doing really well, are there tactics, channels, technology that's working well for them, or kind of just general approaches?
Yeah, I think and this kind of goes back to community, which I feel like we spend a lot of time talking about, is like, what are the ways that brands are getting people really excited to be consumers of that product? And I just said this to someone else I was talking to last week, but I have a Goodles sticker on my phone, and people come up to me like in public and say, "Do you work for that company? Like, I love their mac and cheese." My niece, who's 8, was like, "Wait, I didn't know you worked for that company." I was like, "Well, I don't really work for them," but that kind of pride about the products you're using, I think is really hard to achieve, obviously, but to me, the North Star of, what brands in our portfolio have done really well, whether it's people, holding beatbox at a music festival or, taking a video of them eating an entire box of mac and cheese, like that's pretty crazy to have a product that people are like, I need to show everyone that I'm consuming this, whether it's on social media or, wherever that might be with their family or friends. And so the behaviors that we're seeing to kind of achieve those goals across our portfolio that are really working are still very much on D2C. Although it's much harder now, the brands with founders that really understand e-commerce growth are doing really well and have been able to adapt and shift and learn where to spend money, even though it's much harder than it used to be. And then on TikTok, this combination of UGC and, whitelisting content from creators and creating your own content. I mean, even outside of our portfolio, I've seen brands that have scaled very quickly because they are just posting all the time. The founders are posting and it's super authentic. And I think that's kind of table stakes now, that the founders kind of are the brand. I mean, that's a pretty big trend that we're seeing and it seems to be working. And I think people really love communicating with the founder, feeling like they're a part of the journey, giving input on, flavors or scents or whatever that might be. So Those are a couple of the broader things that we're seeing work. But I think what a lot of it comes down to is, can you generate super fans that are then your advertising out in the world?
What I want to tell you about today is Parker credit cards. Look, there are multiple subreddits dedicated to credit cards points hacking, and I get it. But what do entrepreneurs really want in today's market? Help managing their payback windows when acquisition starts ramping. With Parker credit cards, you get up to 90-day repayments on ad spend to help you on your cash conversion rather than having all that upfront ad spend before revenue starts coming in. Parker allows you to spend aggressively while still managing cash flow, including meta spend. So instead of hunting for best points or cashback programs, realize that the best ROI is to be able to increase your ad spend without hurting cash flow. Go and check them out. Parker credit cards at getparker.com. That's getparker.com. Parker is a financial technology company, not a bank. The Parker Commercial Credit MasterCard is issued by Patriot Bank and a member of the FDIC, pursuant to license by Credit Card International Incorporated. How have they turned, just using them as a case study, how have they turned premium mac and cheese into like such extreme fandom?
Yeah, it's fascinating because, they launched in Target, which was an amazing launch, and really spent a lot of time generating consumer love there and driving velocity in Target. And this, TikTok thing, which I spend a lot of time obviously looking at our brands on TikTok in our portfolio. And I think most people would have said when Goodles launched that it was, a whole family product, kids eat mac and cheese. And then this had some adult flavors. So bringing back mac to adults, and it's acceptable to eat mac and cheese as an adult. But what's been so interesting on TikTok now is this whole, like, you can eat the whole box, like single women, single men. I was just at Target the other day, and like a guy around my age walked out with like 4 boxes. That's all he had with him at Target. And I wanted to stop him and be like, oh, are you also a super fan of this brand? But I think what's helped them is a really good product that tastes really good. And most people would say you taste it and you're not like, oh, I'm having something better for me. So a product that tastes really good and a brand that makes, this treat, this permissible indulgence slightly better for you. Easy to cook, something that people can have multiple times a week, once a week, multiple times a week, feed their family. So I don't know if that answers your question really specifically, but a lot of it comes down to the product, and then getting in front of consumers in retail obviously helped a lot. And now using that retail content to then scale this like brand love on social media. And a lot of that has happened even more recently since they launched.
It actually reminds me, now this would have been several years ago, but there was an ice cream brand, Halo Top, that exited for, I think, 10 figures. And wanted their, I don't know if it was an intentional decision or an unintended consequence. They had better for you ice cream that did taste really good. Now, did it taste as good as like a fully like processed one? People were eating the entire tubs. And like, then they really leaned into that of like, oh, what everyone wants to do is actually eat a full pint of ice cream. And like, I don't feel terrible for eating a full pint of Halo Top. And that kind of became the whole thing, that like, this was an ice cream that was like fine enough for you that you could eat the whole pint and not feel bad about yourself.
Yeah. And I think that's another thing that we spend a lot of time talking about, is like, to your question earlier on, like, do we focus more on trends and predicting the future? And like, a lot of our best investments are not like category creating, these crazy innovations. Especially in food and beverage, a lot of it's like a slightly better version of something on the market or a category that's sleepy. And like, we've seen that time and time again in consumer. And obviously it's amazing when you can create a new category and it works, but like, there aren't that many examples of that. And us trying to pick those is much harder than, this is a category that the consumer understands. They want something a little bit better. It's already a big category. Those are much easier for us to wrap our heads around. But maybe someday I'll be picking the category creator too. Hopefully I'll have one someday. But for now, I think betting on founders building in things that people understand is a much easier investment to make for us.
And then with that, I guess, like, is there other advice that you have for founders in this market if they're thinking about their first institutional raise?
Yeah, I think first and foremost, if anything from this podcast, it's very obvious we care a lot about the founders that we're backing and, our relationship with them. So I would say most important is the people. Really think about who you're taking money from, because you'll be with them for a very long time. Whether they're on your board, whether they're just on your cap table, like you're going to have to deal with them at some point. So my biggest advice is spend time trying to get to know the investors that you're talking to, ask other founders. We always are willing to provide references to our other portfolio companies, what's it like to work with Springdale? And so it could be fun for both of us. Fun, useful. We both help each other. So that's the number one advice. And then the second piece of advice I have is just trying to get in front of people as often as you can and asking for advice. Obviously, taking advice from everyone you talk to is not a great idea. And I think we all want advice and validation. At least I do when I talk to other investors or founders and ask them about, our investing philosophy and how we think about things. But I think the more you get your brand out there in front of investors, the better. And then they're prepared and ready to talk to you when you do reach out about investing. So there's a ton of founders. We just actually made an investment into a brand that we're really excited about, where I've known the founder for over 2 years, and she was just thinking about starting the brand until launching. And doing the diligence process was obviously much easier when you've already known someone for as long as we have. So I think trying to get that quality time, even if it's hard, goes a long way, whether it's in person, on Zoom, or just, email catch-ups. I think the relationship part of it is most important.
Yeah, no, that makes a ton of sense. Mollye, as we head towards a wrap, is there anything that you're seeking from listeners, wanting brands to reach out, operators, collaborators?
Yeah, I think most importantly, always send us cool companies that you're either starting or brands you're meeting. And I am always out there meeting people saying, "Oh, do you have a family friend starting a business?" Or which honestly, has gotten us a lot of intros or deals, or founders that I'm now close with. Is a lot of times just telling people that we're always looking to connect with brands even at the earliest stages. And then as you think about different financial partners, we're always willing to chat. So feel free to reach out. And yeah, we're always excited to talk to people, even if they're just thinking about an idea.
Awesome. Well, Mollye, thanks so much for coming on, and look forward to next time.
Yeah, thank you.